for joining us. I'm Marlon Bowling with you as we watch your ag commodity trade here. And as we look at our grain market, again, it is turning into kind of a whipsaw day here. Now, we were higher last night. We opened up kind of flat on the grain trade, and then we started drifting lower. Let's take a look at where we now stand. On the corn market right now, we are down 3.5 cents on July at 3.50 1/4 per bushel. That's about 7 cents off our overnight high. December down 3 1/4 now at 3.72 1/4. On the soybean trade, here you have July down 5 1/4 at 8.83 3/4. A short time ago it was down 10 or 11. Right now you have November soybeans down 4.5 cents at 9.06 1/2. So that's now about 11 cents off of its overnight high. On the wheat trade in Chicago, you have July trading 2 3/4 higher at 4.80 1/2. It's been on both sides of unchanged today. Let's take a look at Kansas City wheat. Let's go to July here, and it's now trading a penny higher at 4.84. On the Minneapolis wheat trade, this will be your spring wheat market. We have the nearby July trading 1/4 cent higher at 5.49 3/4. That's basically about 8 cents off of its overnight high. The cotton market opened firmer this morning, and we have July hanging on to a small gain of 10 points at 83.42 cents per pound, while December is up 33 points. Now let's go to Scott Gecas in Chicago. He's right there at the trading floor where everything is happening, and he is with Longleaf Trading. All right, Scott, yesterday was a very exciting day on the trading floor. How about today?
Oh, yeah. Today I walked in, just walking up here, I had to make sure that the markets are even open. You know, volume just not there. And you can see that just with the wild swings with no volume. So we opened up with the soybean market a little bit higher, traded pretty well overnight, and then you've seen that dramatic sell-off with hardly any volume. That summer volume, that's what tends to happen. You know, lack of headlines overnight with China retaliation is definitely playing a factor. It looks like everybody's on the sideline waiting for all that headline risk to play out. You know, NAFTA talks are also selling off or causing a little sell-off. That breakdown between the U.S., Mexico, and Canada, that's definitely playing a factor in. So right now it looks like everybody's just waiting for the next headline to break.
Now, speaking of headlines, I do have one new item to share with everybody. It's our new ethanol production. We just got these numbers in just moments ago off of the wire. And last week, U.S. ethanol production came in at 1.064 million barrels per day. You know what? That was up 11,000 barrels a day from the week before. And the 4-week average now stands at 1.05 million barrels per day. That was actually up as well by 9,000 barrels a day. And the stocks declined roughly a little over 500,000 barrels, down to 21.6 million, and no ethanol imports once again. So those are the latest production numbers from the industry, and we'll see if it actually does support the corn market or not. And as we pause for a quick little break here, Scott, I want to come back and get your thoughts on what is happening in our livestock trade. We'll get those thoughts when we come back in just a moment. All right, we can take a look at the outside markets here briefly. The Dow Jones Industrial Average, of course, it was down fairly hard yesterday. Right now, it's down about 39 or 40 points, down 39 at 24,661. What's going on with the dollar value today? Of course, we had a firmer tone here recently in the dollar. Right now, you have your September futures on the dollar index up 50 points at 94.780. However, your deferred contracts are a little bit weaker. How about the crude oil trade? Well, in the energy markets, we have West Texas Intermediate crude. That would be up about 68 cents on that July contract. We're now at 65.75 per barrel. Heating oil trade will jump over there too. We have the July contract now down about 0.8 of a penny, trading at 211.4 per gallon. Now on to the livestock. Here we go. Live cattle trade right now. It's been firming up since the open. We have June live cattle now up $1.06 at 109.58. August up 90, and October up $1.15, trading at 109.65 per hundredweight. Feeder cattle trade. Here you have your August contract up $1.03 at 150.65, and September now $1 higher at 150.90 per hundred, almost on the high of the day. And if you look at the lean hog market, Right now, you have July down $1.53, and you have August, October, and December all over $2 lower. That puts August at 75.38 right now. Scott Gecas rejoins us from the trading floor in Chicago, and a lot of negative action here in the hog trade, but the cattle market really starting to firm up all of a sudden. What's going on with that?
Yeah, I mean, the cattle market is going to start to firm up just going into the July 4th holiday. But, I mean, regardless, the beef as well as the hog, they need a record amount of consumption for the July 4th to get any sustainability. So we're going to see how those numbers play out over the next week or so. But as far as everything still waiting on the headline risk, you know, all this NAFTA talk, all the Chinese trade war talk. So it's all headline risk right now, and that's what you're seeing, a lot of the volume just on the sidelines waiting to get in, waiting to react to the headlines.
When you look at a cattle chart versus a lean hog chart, what do you see in the difference between the technical indicators right now?
Well, for the past few weeks, lean hogs has been leading. It's been super strong, not a lot of volume to the upside. The put-call ratio is definitely flipped. There's more puts being bought than calls, so we're going to see how that plays out. But the lean hogs has definitely been the strongest market as far as, you know, between cattle and hogs.
Do you think it looks pretty toppy, though, at this point, given the market action we've seen for the last day or so?
Yeah, everything that's coming out with the lean hogs for sure, it's all pointing to supply concerns. So if we have any resolution with NAFTA, I think we'll get a lift on it. If the trade war talks, you know, become a bigger issue, you're going to see that supply concern come into more effect, and then you're going to see a big downdraft in hogs. Our
weather team has been talking about temperatures back in the hundreds once again here in the southern plains. Could that be an impact here on the cattle trade?
Yeah, it's definitely going to be a factor in the cattle trade. You might see the cattle weights drop off a little bit, but so far, when they were supposed to be dropping off, they were holding steady. So we're going to see how that's all really going to play out.
All right, it's been a pleasure talking with you, Scott. I appreciate it very much. Good luck trading today. Scott Gecas is with Longleaf Trading, and he's located there at the trading floor.